Yo, what is up, guys? Welcome back to a new video. Today is November 25th, 2025, and today on the charts at 8:30 we had PPI, retail sales, and we had some news as well at 10 a.m. But looking at the charts today, we took a very nice trade today, a very nice dub that could have definitely been held to further liquidity pools to be more further extended trade, but we held our profits to 1 to 2, and we took a nice little dub. Made $660 on the day. Let me explain my analysis coming into the session. So looking back into the session before anything else, we can look at our higher time frames and identify what's happening. So just looking at this 4 hour candle over here. On the 4 hour, what we were looking like was this 4 hour candle was coming down into this 4 hour imbalance here, as well as this imbalance down here. And what I initially first wanted to see was to respect consequent encroachment of this 4 hour imbalance, which didn't end up happening. But then I looked into seeing what happened with this 4 hour imbalance, especially as that 4 hour imbalance aligns with the 1 hour imbalance, the 1 hour, the 4 hour, and the 30 minute. They all align very, very well. So dip into that 4 hour fair value gap would incite a very nice reversal, as well as if this 4 hour candle closed in a certain way where we tap the consequent encroachment of that fair value gap and then open up the next candle respecting that wick's 50% range, which is exactly what ends up happening looking into the market. But one thing to also draw another big piece of our bias is on the 15 minute. This standard deviation leg that was drawn out from this chain of state delivery leg that took place earlier this morning before news um, draws out our projections for standard deviations, and our second standard deviation as well as a 2.5 lie in this 4 hour, 1 hour, 30 minute fair value gap. So with that being said, we wait for a tap into that and wait for a rejection of such. So once we get a tap into that and we react off of that, we first get our initial chain of state delivery off at that point, but I further wait for the hourly candle to close, so wait for another PO3. And what happens once 10 a.m. opens up, we have initial move down, coming back into the imbalances that we created over here, and pulled back into this 5 minute over here, which also happens to be the 1 to 1.5 standard deviation of this range, where if we're looking for a small pullback to then reverse, that's exactly the set of levels that we will look to reverse from. So seeing that as well, that aligning with the 1 minute not standard deviation, sorry, consequent encroachment. We wait for an entry on a 15-second chain of state delivery, and we waited for a 15-second chain of state delivery, pull back to an imbalance, the 15-second imbalance, which would be that, and then targeted 1 to 2. I entered in 5 contracts, which although I could have been in a slightly higher risk today, which would have allow me to make some more money, I only took half of what one contract was, and that was 5 contracts on mini. So I took, sorry, on micro. So I took 5 contracts. I took partials at this deviation point over here as we inverse a certain fair value gap, and then we could have possibly had our retracement. And just to be safe, I took a little bit of partials over here, moved my stop loss up slightly into this fair value gap low with the 15-second, and then took my second bit of profits once ES took the high that we failed to take on NQ. Not failed to take on NQ, but took the high that we wanted to take. So with that being said, made $660 on that trade. Hopefully gonna go into the next day to make some more money. And one thing to also point out as well, after this trade idea played out, I was sitting in the call, watching price action. I was waiting for a possible second setup to present itself, and that second setup did present itself over here as we created a bit of a consolidation range after our take profit was hit. And with the consolidation range setting a low and a high, we manipulated the low of that range. And after manipulating that low, we can go to the 15-second. Manipulated that low, created our chain of state delivery after closing candles above over here, pull it back into this order block over here, taking your entry off of that, or this 15-second, again, chain of state delivery, pull back to imbalance over here on this candle, and then targeting the recent high that we created over here at 9:59 at the 10 a.m. high. So targeting that, you would have had another very nice trade idea. Sorry, that would have been a separate entry on its own. That would have been the pullback to chain of state delivery on the 1 minute. But let's see where that entry would have had us. That entry could have had us at 737. Let's see where 737 lies on this chart. 737 is over here. Stop loss at the candle body. You would have been above a 1 to 2, which would have been perfect. That would have been around a 1 to 4 risk to reward trade, and that is a beautiful setup right there on the 15-second, and even if you don't take the 15-second entry, the very precise entry you could have taken, after that take profit was hit, you could have taken this rebalance entry over here that pulled back into change of the state with your stop losses at possibly even this like candle wick low over here after this set of fair value gaps and bullish candles, so then target the high over here, or possibly even just close at 1 to 2 of this range as we're taking multiple continuations. But although that high didn't currently get hit and we are pulling back right now, that could have been another trade idea that's like, could have been managed in a certain way. But one thing to pay attention to as well is that we did have another entry as well for sells, and that entry takes place after drawing the deviation from this chain of state delivery leg that occurred at the end of London session. And with that chain of state delivery leg, we have drawn out these 3 standard deviations that if we respect a short-term reversal or a pullback before reversal, we expect it to happen in one of these standard deviation ranges. So that top standard deviation at 1.5 ends up getting tapped into. We create our 15-minute chain of state delivery, and then allowing us to take our entry right with market open during New York session into this 15-minute fair value gap or this order block as well. And that 15-minute entry would have allowed you to then target the new standard deviation that we had drawn out, either targeting the second standard deviation for our higher time frame reversal or any of these 3 standard deviations to target a short-term reversal that could have been up to your own discretion. With that being said, we're going to take this knowledge and go into our next trading day. See you guys in the next one.